Inflation and population. Those are definitely the two biggest drivers right now that we're seeing nationally. And we're going to get into those numbers right here. Hey everyone, welcome back to this week's episode of the Vancouver Life Real Estate Podcast and YouTube channel. Bit of a different look here, as you can tell. Ryan and I, and actually our whole team, are down in Las Vegas for the EXP conference. This is a conference that our brokerage puts on, all real estate based, and it's been very, very impressive and inspiring. We'll do a recap maybe next week, but for now, we want to make sure to get you our weekly video. So we saw the USA inflation print come in this week, and basically the numbers were not as expected, and to the upside or to the downside, I guess, depending on which side that you're on. What happened? So the core consumer price inflation, this is the one that excludes volatile food and gasoline prices, because hey, they can push these numbers around as much as they want to make it kind of produce the number that they're after. But it hit 6.6% last month, and that's basically the fastest pace it's been in 4 decades. That actually went up from the month before. That was the core consumer price inflation. Now, the overall CPI, the overall consumer price index inflation, it actually went down, but literally like 0.1%. It hit 8.2, down from 8.3. And of course, that number missed the targets. That was expected to be lower. And the fact that it wasn't definitely hit the stock market right away. We saw markets peel off a lot this week after that announcement. And with it being so stubborn, obviously this is going to empower the Fed to do more rate hikes. And what's going to happen here in Canada is likely the same, because we've got the inflation print here next week. It's on the 19th. At this point, it feels likely it's going to emulate a lot of what just happened in the States. So it might tick down, but only fractionally here. And then on the 26th, we've got our next Bank of Canada rate announcement. Right now, 0.5 or 50 basis points seems all but guaranteed. But again, if the print is high, it's going to empower them to maybe even go 75 this time around. So we're going to be tracking that one closely, and we will have an updated release video on that day.
Yeah, it's an interesting time that we're in. Dan, it's interesting being down here in Las Vegas and seeing, still the level of economic activity that's taking place down here. People are still spending money, still going out for dinner, So I don't think inflation is as much of a problem as it is. I don't think that the problem has permeated a lot of personality or a lot of behavior down here yet. So that's why I don't think we're seeing such a huge change in the inflation print. But I guess we'll see as this continues to go throughout the year. More rate hikes typically end this. When? Anyone's guess at this point. But guys, welcome back to the channel. I'm just going to make my quick ask here. If you please give us a big thumbs up and hit that subscribe button. We put out these videos every week for our YouTube and podcast listeners and our online community to make sense of this very complicated real estate market. If you've got any questions, please reach out in the numbers below. Let's talk about rates a little bit more here. We've been chatting to some of our sources back home about what they think the big five lenders are going to be doing. We're likely going to see fixed rate mortgages moving higher this week. Above 6% is likely what we're going to see. Variable rates are also set to move higher. Rumblings that we're hearing suggest somewhere between 75 and 100 basis points, which could be making things a lot more expensive. And again, designed to really crush that behavior of spending in the marketplace. I think November is going to slow down even more, and likely we'll continue to see slowdowns until the end of the year, at which point I think then the Bank of Canada might have a different take. But right now, the words we're hearing from Tiff Macklin, the things we're expecting to see from the Bank of Canada, I think they're not done, as you said, right, Dan?
Yeah, there's definitely more to come here. Their work is still laid out in front of them for sure. And it is an interesting point here, Ryan. You're right. Like, we're here in Vegas and you go on a Wednesday night and you can't find a restaurant because everything is booked, fully booked out. People are certainly here spending money. Vegas is a bit of a unique scenario, as it always will be. But again, it's a good reference as to not really seeing the pain out there, but obviously it exists, right? You can't have rates this high without there being a lot of pain out there. Again, it's just not affecting everyone as a whole. Okay, so how is this all affecting prices? Well, we've got a bit of a national outlook for you here where we saw the sixth month in a row of price declines. It dropped about 1.4% in September. And we are talking HPI here. So national HPI is now down 14% from the peak that was back in March. This index, this HPI that they've been tracking, it's only been around since 2005. And since then, this definitely is the steepest correction we have seen since they started tracking this metric here. So 14% since March, 6th-month decline in a row. I'm going to get into a little bit of what's happening locally here, but just as you can, or just wanted to share this first, that Canadian average home price 14% down, and that is definitely going to keep going at this point. It hasn't found the bottom yet. Again, national home prices, right? Like, what's a national home? It's a hard thing to really track, and that's why we go hyper-focused locally here. But again, that's going to be the headline that you'll hear for a while here when it comes to overall Canadian home prices.
I think, Dan, when all of this started, you said you had a prediction that it would be somewhere between 15 and 22% in terms of correction. It seems like we're definitely headed into that territory.
Yeah, and BC here, like for GVRD, I am still saying 15% HPI will be the bottom number.
Yeah, I tend to agree. And here's some reasons why. Let's talk population, and let's also talk maybe a little bit of the inflation story in Canada specifically too. So if we speak to the population growth, Canada has gone through its largest population growth quarter ever recorded, bringing in over 280,000 permanent residents in the last quarter. That's up 700,000 year over year. That's a massive number. Ontario grew by 300,000 year over year, and it's growing right now at 3 times the rate of 2015. Right. So BC, by comparison, saw 120,000 new permanent residents grow in that population growth. That's a massive year over year growth by some significant margin. And that's a record, right? That's a local record. So, so when you start talking about population growth and we start looking at what that means for housing and prices, I mean, ultimately, enough population growth is going to provide a bottom in terms of prices when it comes to the real estate market. With that being said, we're also at record low listing inventory numbers as well. So it's a very complex situation that's unfolding here. And as we look to some of the comments that Tiff Macklin has said over the last couple of weeks, the story for Canadian inflation for some time was that it was a Russia-Ukraine issue causing major spikes in energy. And while that's the case, the core inflation that we're looking at, it tries to remove those volatile pieces to try and get a better understanding of what's sticky in our economy. This hasn't become it's no longer a China manufacturing supply chain related story either. What we're really seeing now is the result of a truly overheated economy. That's been the result of extremely low policy rates that are still too stimulative for local businesses. They still can't keep up with the demand that's taking place in the local economies. So, I still think that, like you said, Dan, is it going to be a 50 or 75 basis point hike come October 26? We'll see, but certainly something is coming.
Absolutely. Yeah, they have to. It's still, the mandate is to fight inflation, and it's still obviously way too high.
Yeah.
So quick look here on our local numbers. How is this landscape that we're in right now affecting Vancouver real estate? Well, we know we had that 46% drop in sales year over year for the month of September. We're 2 weeks in here now for October, and things are interesting because they're ticking up a bit. And that is coming first in sales. We're sitting at about 950 sales here halfway through the month, and we'll likely hit in and around 1,900 by the end of this month. That's a an increase of maybe 1 or 200. Again, not huge, but an uptick over September is a bit unusual here. And then prices. Average right now, again, 2 weeks into the month, are flat. They basically haven't moved from last month. Interestingly, median is up like $55,000 from last month. Again, too early to call these final numbers. Obviously, we're going to let it all wash out. But let's think here. When we look at our prices, we've got both median and average that have been basically flat for 4 months in a row here. And they're both sitting at about 10% off the peak. So to see that type of resilience in our market, it's a bit surprising. Even though they keep hammering rates, again, it's outperforming the national market, definitely outperforming Ontario. But again, take note. I mean, 4 months in a row of flat prices is starting to definitely be a trend line there. And we talked a lot about early signs of stabilization on our last podcast, and here's a little bit more further truth and data that is supporting that.
Yeah, at least locally, right? I hope that remains the case. Again, this doesn't help the affordability issue of everything. It's still arguably one of the most unaffordable positions our market's ever been in terms of high interest rates and high prices. So, again, it's a developing story and something that we're going to keep monitoring for you, especially as we get closer to the end of the month.
Perfect. Well, quick one for you guys this week, but we wanted to make sure we got you an update. So thanks as always for watching and listening. Please reach out to us. Feel free, give us a call. We'd love to chat and just kind of hear more about what's happening for you in the real estate market. And if you have plans, we'd love to help. Enjoy, and we'll see you next week.